Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 May-June Paper 1-3. This is Paper 1, which consists 30 questions, each of 1 mark, and the total time limit for this paper is 1 hour. So in this video as well, we'll be attempting to solve this paper under 1 hour. Without any further delay, let's get started. For the first part, we need to figure out what are the advantages of being a sole trader. The first one is ability to make quick decisions. This is true because sole trader does not have to consult with any other parties in order to make any decisions regarding his or her business. The second one is no bank borrowings are needed. This is not true because as a sole trader, he might like to expand his business, and if that is the case, then he might need some bank borrowings. So this is incorrect. The third one is that owner keeps all the profits. This is absolutely true because being a sole trader, he will be the sole owner of the business, which means that all of the profits as well as the losses will have to be borne by the single person. The fourth one is unlimited liability for debts. Sole trader will have to bear unlimited liability, but we cannot categorize this as an advantage. This will rather be a disadvantage. So this is incorrect. So the correct answer should include 1 and 3, which is given by option B. That is all for the first question. Let's move towards the second one. What is not a purpose of ledger accounts? The first one is to assist in the preparation of the financial statements. This is definitely a purpose. Second one is to assist in the preparation of the trial balance. This is also true because all of the values within the trial balance will be the closing balances in the ledger accounts. The third one is to record the double entry from the subsidiary books. This is also true. The fourth one is to verify the accuracy of the bookkeeping system. Preparing a ledger account will not verify the accuracy because there could be some errors in original entry as well as error of omission. So the answer we're looking for is option D. That is all for the second question. Let's move towards the third one. An item is included in a financial statement because it affects the interpretation of financial statements. Which accounting concept is being applied? So the first option is consistency. It just means that we should apply the accounting policies consistently over the years, which is not what it is being described in this question. So A is incorrect. The second one is materiality. It just means that every material information should be presented within the financial statement. And in this case as well, we're talking about an item which is included in a financial statement because it affects the interpretation of financial statements. So the correct answer will be option B. Let's take a look at the remaining options as well. Money measurement concept just refers to the fact that we only need to record the monetary values within our financial statements. And the last one is substance over form, which only really applies to hire purchase, which is not what it is being described in this case. So that is all for the third question. Let's move towards the fourth one. A business acquired new factory machinery costing of 120,000. So this is the cost. This amount was included in the non-current assets and depreciation at 10% of cost was charged to the draft statement of profit or loss for the period. In addition, the business paid 14,000 for installation of the machinery and 6,000 for insuring the machine. These amounts were treated as revenue expenditure for the period. So in this case, installation expense is not a revenue expenditure because it is a one-time expenditure which should be capitalized. Whereas 6,000 is for insurance, and insurance is something that we have to pay for every year. So this can be categorized as revenue expenditure. This part is correct. The classification of installation is incorrect. Now, the draft statement of profit or loss for the period showed a profit of 50,000. We need to calculate the revised profit for the period. Okay, so previously the first error was that the depreciation was only charged on 120,000, but actually the 14,000 should also be capitalized. Okay, so let's calculate the previous depreciation. That is just the original cost of 120,000 times 10%, which results in 12,000. Now, new depreciation. The cost should be 120,000 plus the installation cost of 14,000 times 10%. This results in the value of 13,400. Okay, let's start with the draft profit of 50,000. Now we need to exclude the previous depreciation and include the new depreciation. Remember that depreciation is subtracted while calculating the profit. So this was previously subtracted. Now in order to remove it, we just need to add it back. So we need to add the 12,000 and subtract the correct amount of 13,400. Similarly, previously the installation of 14,000 was subtracted as part of the revenue expenditure, but that should not have been the case. So this was previously subtracted. Now in order to remove it, we just need to add it back. So we add the 14,000. And the treatment for the insurance of 6,000 was already correct, so we do not need to change that. Now this results in the revised profit for the period to have the value of 62,600. This is the answer we're looking for, which is given in option C. That is all for the fourth question. Let's move towards the next one. Jake sold a non-current asset which was not fully depreciated. He mistakenly recorded this by debiting the bank account and crediting the sales account with the proceeds. Okay, debiting the bank account part is correct because we received the sales proceeds into the bank account, but we should not have credited the sales account. This is incorrect treatment. What was the effect of this error? The first one is that assets were overstated. This is absolutely true because it should have been credited to assets. And credit assets just means that there was a reduction in asset, but we did not do so, which means that the assets would be overstated. Automatically, second statement is incorrect. The third one is that the profit was overstated. This is also true because instead of including the profit or loss on disposal, we included the entire sales proceeds as the sales. So this would definitely overstate our income, and as a result, the profit will also be overstated, which means that fourth statement is automatically incorrect. So the correct answer should include 1 and 3, which is given by option A. That is all for the fifth question. Let's move towards the sixth one. Sarah bought a non-current asset. Depreciation was provided at the rate of 10% per annum in years 1 and 2. It was sold at a profit in year 3. The policy of the business is not to charge depreciation in the year of disposal. How would profits be affected if the rate had been 15% per annum? Previously, the rate of depreciation was 10% and now the rate is to be increased by 15%. As a result, the depreciation would be higher, right, by increasing the rate. It means that expenses would be higher and as a result the profit would be lower. So we're looking for C and D for the profit. Now for profit in year 3, if we charge a higher depreciation, it means that our net book value will be lower. And if we compare it to our sales proceeds, it means that the profit on disposal will be higher, because the formula is sales proceeds minus net book value, and if the negative aspect is lower, overall we'd get a higher value. Since the profit on disposal is higher, it just means that the profit in year 3 would be higher, which is given in option A and C. So the correct answer for both these profits in year 1 and 2 as well as the profit in year 3 is given by option C. That is our correct answer. That is all for the sixth question. Let's move towards the next one. A business buys a vehicle for 10,000 on 1st January year 1 and sells it for 6,500 on 1st January year 3. The business has depreciated the vehicle at 10% a year using the straight line method. The business provides a full year's depreciation in the year of purchase and none in the year of disposal. What amount for profit or loss will appear in the disposal account, and on what side of the disposal account will it be shown? Okay, so basically we need to prepare a disposal account. We always start with the cost of the non-current asset that is being disposed on the debit side. So that will be 10,000 in this case. Then we have the sales proceeds. Sales proceeds will always be recorded on the credit side. The next thing that we need to record on the credit side is our accumulated depreciation. And in this case, we have depreciated this vehicle for year 1 and year 2. So that's 2 years. And we are using a straight line method. So the depreciation for 2 years is just going to be the cost of 10,000 multiplied by the rate per annum of 10% and multiplied by 2. So this gives the accumulated depreciation of 2,000. This will also be recorded on the credit side. Now we just have to check which side is heavier. In this case, clearly the debit side is heavier. So we have 10,000 here, 10,000 here as well. So the statement of profit or loss will be included on the credit side. This will reflect the loss. So the loss on disposal will be 10,000 minus 6,500 minus 2,000. This results in the value of 1,500. So we have 1,500 loss or 1,500 on the credit side, which is given by option A. That is all for the seventh question. Let's move towards the next one. Which errors would be identified by preparing a trial balance? The first error is a bank payment of 275 for rent has been entered as 257 in the cash book. Remember that cash book is our book of prime entry. So we have made an error within the book of prime entry. So this is error of original entry. Error of original entry will not be disclosed by preparing a trial balance. So this is incorrect. The second one is a discount received of 47 has been entered twice in the account. This can clearly be identified by preparing a trial balance because as a result, the credit side will be 47 higher as compared to the debit side. The third one is the purchase of a new motor vehicle costing 12,500 has been entered in the purchases account. Okay, in this case, we have error of commission because we have included an item of asset as an item of expense. And error of commission is something that will not be identified by preparing a trial balance. So third statement is incorrect. The fourth one is the total sales of 34,670 from the sales journal has been posted to the sales account as 34,760. So this is the error of transposition. And error of transposition will be identified by preparing a trial balance. So the answer we're looking for should include 2 and 4, which is given by option C. That is all for the 8th question. Let's move towards the next one. A suspense account was opened to record the difference on a trial balance. The following errors were then discovered. We need to calculate the opening balance on the suspense account. So we'll prepare a suspense account and we will only enter the amounts, not the headings. Okay, the first error is that the discount allowed of 2,000 had only been entered in the sales ledger control account. So it just means that we did not record discount allowed as an expense separately on the debit side. So within the trial balance, we now have to record this expense on the debit side. So as a result, on the suspense account, it will go on the opposite side. Now the second one is that a check for 1,500 paid for repairs had been entered as 5,100 in the repairs accounts. So the repairs accounts is overstated by 5,100 minus 1,500, which is 3,600. And repairs is an expense which will normally go on the debit side, but since we're talking about overstatement, we need to record it on the credit side so that we can cancel it out with the previously overstated amount. Now within the suspense account, this 3,600 will go on the debit side. Okay, clearly we can see that the credit side is understated, so the opening balance will be on this side. The total from the debit side is 3,600. Now for the opening balance, we will get 3,600 minus 2,000, which is 1,600. So the answer we're looking for is 1,600 credit, which is given by option A. That is all for the 9th question. Let's move towards the next one. At the financial year end of a business, the following information is available. We need to figure out the current balance in the cash book. Okay, so we have the debit balance on the bank statement. Debit balance on the bank statement just means a negative amount. So let's start with the negative 1,000. Then we have unpresented checks. Unpresented checks are the expenses not yet recorded within the bank statement. So we need to subtract this 300 now. Then we have lodgements not yet credited by the bank. So these are uncredited deposits, which are basically the income not yet recorded by the bank statement. So we need to include the 600. Okay, then this will give us the value of the updated cash book. That will be negative 1,000 plus negative 300 minus 600, which results in negative 700. Okay, then we have been given the bank charges and the interest charged. For that, we need to prepare a cash book. And we can see that the balance on the cash book is negative, and the negative balance as a closing balance will be recorded on the debit side. Okay, then we have our bank charges and interest charged, which is an expense. So we need to record it on the credit side within our cash book. So the opening balance will be on the credit side. So we have 700 as our total, and the opening balance will be 700 minus 150, which results in 550. So the current balance in the cash book is 550 credit, which is given by option C. That is all for the 10th question. Let's move towards the next one. What do the debit side closing balance carried down and the credit side opening balance brought down represent in a sales ledger control account? So sales ledger control account, we are talking about credit side opening balance brought down. So balance brought down on this side will be the debit side closing balance carried down. So balance carried down on this side. These two are the same thing, right? Because the opening balance on one side will act as the closing balance on the opposite side. And we're talking about a sales ledger control account, which is basically an asset account. As an asset, the opening balance should be on the debit side, but in this case, we're talking about the opening balance on the credit side. So these will just represent the amount that is overpaid by the credit customers. So we now need to pay it back to the customers. So it is basically owing to customers, which is given in option D. That is all for the 11th question. Let's move towards the next one. The purchases ledger control account for a business shows a closing balance of 7,640. The following items were then discovered. We need to figure out the credit balance to carry down after adjusting for these items. Okay, so we'll prepare the purchases ledger control account roughly. We have the opening balance of 7,640, and since we're talking about trade payables account, the opening balance will always be on the credit side. The first error is that a purchase invoice for 250 had been entered in the purchases ledger but not in the purchases journal. So remember, the control account is prepared by taking the book of prime entry as our basis, and in this case there is an error within the book of prime entry, which means that there is an error within the control account as well. So we now need to include this 250 as credit purchases. Credit purchases will be recorded on the credit side, so we record 250 right here. For the second one, a sales ledger contra of 630 had not been entered. Contra is something that will reduce the trade payable, so this needs to be recorded on the debit side. Then a suppliers account with a debit balance of 70 had been omitted from the control account. So this just means that we still owe 70 to this supplier, so this will definitely increase our trade payables, which needs to be recorded on the credit side. Then the returns inwards of 540 had been entered on the debit side of the control account. Return inwards is sales returns, right? And we're talking about purchases ledger control account. But as an error, we recorded this sales returns on the debit side. So now we need to remove it. In order to remove it, we just need to record it on the opposite side. That is all. We can clearly see that our credit side is heavier, so the closing balance will be on the debit side. Now the total on the credit side will be 7,640 plus 250 plus 70 plus 540, which results in 8,500. Now the closing balance will be 8,500 minus 630, which results in 7,870. So this is the answer we're looking for, which is given in option D. That is all for the 12th question. Let's move towards the next one. In a draft statement of profit or loss, 2 errors were discovered. We need to figure out the effect of these errors on the draft profit for the year. The first error is that a profit of 6,000 on the disposal of equipment had been treated as a loss. Okay, so we need to consider 2 different things here. Profit was understated, so we did not record the profit on disposal, and the loss was overstated. Okay, profit on disposal understated means that the profit will be understated by 6,000. Then loss being overstated again means that the profit is understated by another 6,000. Then a charge of 18,000 for the depreciation of a motor vehicle had been omitted. Since we did not include the expense, now you can see that expenses were understated. And as a result, the profit will be overstated by 18,000. Okay, so we can just figure out the total. And in this case, we can clearly see that there is an overstatement. So let's just add the overstated amount and subtract the understated amount. That will be 18,000 minus 6,000, which results in 6,000. So the final answer is overstatement of 6,000, which is given in option A. That is all for the 13th question. Let's move towards the next one. At the beginning of the financial year on 1st July, a business shows an accrual on the rent account of 600. So this is our opening accrual. Then during the financial year, the payments were made for rent as detailed below. Okay, on 26th July, we paid 3 months rent to 31st July. So this will be for the months of May, June and July. Then on 11th November, we paid 4 months rent to 30 November. So this will be for August, September, October and November. And on 15th March, we paid 4 months rent to 31st March. So this will be for December, January, February and March. Now, which amount is to be shown as a prepayment or accrual for rent at the end of the financial year on 30 June? So our year end is on 30 June, but we can clearly see that we've only paid up to the month of March. So there is an accrual for the 3 months, April, May and June. And let's calculate the rent per month. This 1200 is for 4 months. So if we just divide it by 4, we will get the rent for 1 month, and that will be 300. So we have accrual for 3 months. So the accrual for rent is just going to be 3 times 300, which is also 900. So 900 accrual is the answer we're looking for, which is given in option C. That is all for the 14th question. Let's move towards the next one. A sole trader sold goods at a markup of 50%. Markup of 50% just means that the selling price is cost times 1 plus 50%. So we're basically increasing the cost by another 50% of the cost. During the year, he withdrew goods for his own use. The drawings account was debited and the sales account was credited with goods at the selling price of 5,400. What was the effect of these errors on the profit for the year? Okay, the first thing to notice is whenever we have goods withdrawn for his own use, we always need to subtract its cost within our cost of sales, not the selling price. So let's calculate the corresponding cost for this value. 5,400 will be equal to cost times 1 plus 50%. That means the cost will be 5,400 divided by 1 plus 50%. This results in the value of 3,600. Okay, now let us look at the impact on profit for the year. Let's start with the previous amount of 5,400. Like I said before, goods for his own use is subtracted within the cost of sales, which is also subtracted. So we basically added the 5,400 to the profit. Now let's repeat the same process with the cost. It means that we should have added 3,600. Clearly, the profit was overstated. So overstated by the amount of 5,400 minus 3,600. Which results in the value of 1,800. So the answer we're looking for is 1,800 overstated, which is given by option A. That is all for the 15th question. Let's move towards the next one. X and Y are in partnership. They do not have a partnership agreement. Which statement is correct? Interest on capital is earned at 5%. This is incorrect because in the absence of partnership agreement, there will be no interest on capital. Second one is interest on drawings is charged at 5%. This is also incorrect because again, in the absence of partnership agreement, there will be no interest on drawings. For the third one, we have interest on partners' loans is earned at 5%. This is true. So this is the correct answer. Let's take a look at the fourth option as well. Profits and losses are shared in the ratio of capital contributed. This is incorrect. Profits and losses are shared equally. That is all for the 16th question. Let's move towards the next one. Yasmin and Zara are in partnership, sharing profits and losses in the ratio 3:2, respectively, after providing Zara with a partnership salary of 8,000 per annum. During the partnership's first year of trading, Yasmin's drawings total 11,500 and the partnership made a profit of 7,000 before appropriation. What was the closing debit balance on Yasmin's current account? Okay, so let us prepare Yasmin's current account. Remember that this is the first year of trading, so there will be no opening balance. The first item we can record is her drawings, which was 11,500, and the drawings will always be recorded on the debit side. Then there is also a salary, but this is the salary provided to Zara, so we do not need to record it within Yasmin's current account. Then we have profit of 7,000 before appropriation. Okay, so let us calculate the residual profit. We can start with 7,000, and in this case we only have information regarding salary, so we need to subtract the salary of 8,000, which will result in the residual loss of 1,000. Now we need to share this loss based on the profit sharing ratio of 3:2. So 3 parts of 5 parts belongs to Yasmin. So the loss that will be shared by Yasmin will be 1,000 times 3 by 5, which results in 600. Since this is a loss, this will have to be recorded on the debit side. So we have 600 right here. Now let's calculate the closing balance. That will be 11,500 plus 600, which is 12,100. The closing balance will also be 12,100. This is the answer we're looking for, which is given by option D. That is all for the 17th question. Let's move towards the next one. A company is planning to invest funds in a project. Current interest rates are high and the company wishes to avoid a change in the control of shareholders. What method should a company use to fund a project? The first one is a bonus issue. If we make a bonus issue, we will not get any money from outside parties, so we will not have any money to invest funds in a particular project, so option A is incorrect. Option B is a fully subscribed rights issue. So if we issue new rights shares, then it means that we do not have to pay any interest rates, because on the shares we will be providing dividend, which are discretionary. Then it also avoids a change in the control of shareholders, because rights issue will only be provided to the existing shareholders. So B is the answer we're looking for. Let's take a look at the remaining options as well. An issue of debentures. Again, if we issue debentures, it means that we will have to pay high interest rates, so that goes against what we wish for. Then the fourth one is a new issue of shares. If we issue new shares, we cannot avoid a change in control of shareholders because new people can also become a shareholder in the company. That is all for the 18th question. Let's move towards the next one. A company's statement of financial position at the beginning of the financial year on 1st January is shown. So we have our issued share capital, share premium, revaluation reserve, general reserve, and retained earnings. Profit for the year is given. During the year, the following took place. What was the increase in the company's equity and reserves for the financial year ended 31st December? The first one is an issue of 500,000 ordinary shares of 1 each at a price of 2.5. So due to this issue, definitely our company's equity will be increasing by 500,000 times the rate of issue, which is 2.5. So this is 1,250,000. So that's the first increment. The second one is an upward revaluation of non-current assets of 250,000. Again, since this is an upward revaluation, this will be added to the revaluation reserve. So again, there is another increase of 250,000. Then a transfer of 100,000 from retained earnings to general reserve. There is no overall change by this within our reserves because we're just taking the 100,000 from retained earnings and adding it to the general reserve. So there is no impact. Fourth one is a payment of ordinary dividends of 125,000. When we pay dividends, our equity will definitely decrease. So we need to subtract this 125,000. Then we also have profit for the year. It will be added to the retained earnings, which will definitely increase equity. So plus 680,000. So the total increase will be of 2,055,000. This is the answer we're looking for, which is given in option C. That is all for the 19th question. Let's move towards the next one. Who are internal users of accounting information? The first one is customers. So customers are definitely not the internal users because they are not internally involved with the business. This is incorrect. The second one is directors. So directors are definitely internally involved within the business. So that is true. Let's take a look at the remaining options as well. The third one is potential investors. Again, they are not directly involved within the business, so that's incorrect. The fourth one is providers of finance. So they are just the lenders. Again, they are not really internally involved. They're just providing finance for running the business. So the correct answer is option B. That is all for the 20th question. Let's move towards the next one. Which actions will make the asset test ratio worse? Okay, so the formula for asset test ratio is current asset minus closing inventory divided by current liabilities. And we want this to be worse. So in order for our asset test ratio to decrease, either the current assets should decrease, or the closing inventory should increase, or the current liability should increase. We're looking for these three things. The first one is owner taking goods for own use. So if the owner takes goods for own use, it will definitely reduce our closing inventory. But in this case, we want to increase the closing inventory. So this is incorrect. Second one is paying trade payables. If we pay trade payables, then our current liability will decrease, but we want the opposite. So again, this is also incorrect. Third one is purchasing a non-current asset by check. If we purchase a non-current asset by check, our current asset will decrease because the bank balance will be reduced. That is what we require, so this one is correct. And the fourth one is repaying a non-current liability. If you repay a non-current liability, it means that the cash or bank balance of the business will be decreasing, which is basically saying the current assets will be decreased. So this is also true. The correct answer should include 3 and 4, which is given by option D. That is all for the 21st question. Let's move towards the next one. The business provided the following information relating to its most recent financial period. Okay, we need to calculate the rate of inventory turnover in times. The formula is cost of sales divided by average inventory. Let's calculate the cost of sales. It is just going to be opening inventory plus purchases minus closing inventory. Then if we have carriage inwards, we need to add that as well. Okay, so we have the opening inventory of 170,000. We have purchases of 700,000. We have the closing inventory of 210,000. And we have the carriage inwards of 80,000. This results in the cost of sales to have the value of 740,000. Okay. Now for the average inventory, the formula is opening inventory plus closing inventory divided by 2. And we have the opening inventory of 170,000. We have the closing inventory of 210,000. divided by 2. This results in the value of 190,000. And this results in the rate of inventory turnover to be 3.89. This is the answer we're looking for, which is given by option B. That is all for the 22nd question. Let's move towards the next one. Actual output for a business is higher than budgeted output. Which cost will still be the same as budgeted? The first one is fixed cost per unit. This is not true. Only the total fixed cost will remain the same. Then we have total fixed cost. This one is true. We have total variable cost. With the change in output, the total variable cost will also increase. Then we have variable cost per unit. That should remain the same. So the correct answer we're looking for in this case should include 2 and 4, which is given by option C. That is all for the 23rd question. Let's move towards the next one. A business uses the first in, first out FIFO method for valuation of inventory. There was no opening inventory in July. The business purchased direct materials during July as follows. Okay, so it purchased on 3rd July and 15th July. Quantity is given as well as the cost per kg. Each unit required 4 kg of direct materials. The labor cost for each unit was 42. The fixed overhead for July was 85,000. In July, 1,000 units were produced and 800 units were sold. What is the average direct cost for each unit? Okay, so if we're calculating the direct cost, we need to calculate it based on the units that were produced. So we're talking about 1,000 units in this case. And we know that each unit requires 4 kg of direct materials. So 1,000 units will require a total of 4,000 kgs of direct material. Let's calculate the price for these 4,000 kgs. First of all, we'll use the purchases made on 3rd July because we are talking about FIFO method of inventory valuation. So we'll use these 2,000 kilos first. So 2,000 at the rate of 25. Then we need another 2,000 and this will be at the rate of 28. So this results in the total direct material to be 106,000. Then we have direct labor as well. The direct labor cost for each unit is 42. So the cost for 1,000 units will be 42,000. This is the direct labor. Now we need to calculate the average direct cost. Okay. So let us just add up the direct cost. We only have direct material and direct labor. So that will be 106,000. Plus 42,000. Then we require it per unit. So we can just divide it by the total units produced, which is 1,000. This results in the value of 148. This is the answer we're looking for, which is given by option A. That is all for the 24th question. Let's move towards the 25th question. A business provides accounting services to its clients. One of its employees takes 30 hours to complete a job. The employee's hourly rate is 25. The business absorbs its overheads at a rate of 10 per labor hour. It adds 20% profit to the total cost of the job. What is the total price of the job charged to the client? First of all, let us calculate the cost of this job. The employee will take 30 hours and the hourly rate is 25. Then we also have overheads at the rate of 10, which is absorbed per labor hour. So again, the labor hour of 30 times the overhead per labor hour of 10. This will give us the total cost of 1,050. Then we have 20% profit. So the profit is just 20% of our cost, which is 210. Now the selling price is just the cost plus profit, which is 1,050 plus 210. This results in the value of 1,260. This is the answer we're looking for, which is given in option D. That is all for the 25th question. Let's move towards the next one. A business operates a staff cafeteria at a cost of 12,000. What is the most appropriate basis for apportioning this overhead? Since we're talking about staff cafeteria, the most appropriate basis will be the number of employees, which is given in option D. That is all for the 26th question. Let's move towards the next one. A business has the following budgeted and actual results for a month. We have the budgeted fixed overheads and actual fixed overheads, as well as the under absorption of overheads. Fixed overheads are absorbed per unit. The budgeted number of units is 118,000. What is the actual level of activity in units? In this case, we have under absorption, which means that the budgeted overhead is less than the actual overhead. So 3,000 is equal to actual overhead minus budgeted overhead. Let's substitute the values. The actual fixed overheads is 360,000. And remember, we need to calculate the budgeted overhead absorbed, not the entire budgeted overheads. So we take this value of 354,000 divided by the budgeted number of units so that we get the fixed overheads per unit. And the budgeted number of units in this case is 118,000. Then we need to multiply this by the actual units so that we get the budgeted overheads but for the actual units. Now we just need to solve this. This is just going to be 354,000 divided by 118,000 times actual units will be equal to 360,000 minus 3,000. Now actual units will just be 360,000 minus 3,000 times 118,000 divided by 354,000. This results in the value of 119,000. So this is the answer we're looking for, which is given by option B. That is all for the 27th question. Let's move towards the next one. Which statement concerning break-even charts is correct? At the break-even point, revenue and fixed costs intersect on the chart. This is not true. Revenue and total cost will intersect. The second one is choices of optimal activity levels cannot be made using break-even charts. This is incorrect because the break-even charts clearly define the point at which the total revenue will be equal to the total cost. So that is the point where the company will not make any profit and the point where the company will not have to bear any loss. So in order to figure out the optimal activity level, definitely break-even charts can be used. The third one is costs and revenues are assumed to show linear behavior. This is true because normally when the quantity increases, we usually get discounts. So the cost line will not be straight. It will be somewhat like this. But this is not represented within our break-even chart. So C is the answer we're looking for. Let's take a look at the remaining option as well. Revenue in excess of fixed costs represent the margin of safety. That is not true. Revenue in excess of the break-even point will represent the margin of safety. That is all for the 28th question. Let's move towards the next one. A business provides the following information. So we have our break-even point, unit selling price, as well as the contribution to sales ratio. What is the effect on the break-even point if the unit selling price is increased by 10%? The first thing we need to do is calculate the contribution per unit. So we can use the formula for contribution to sales ratio. Contribution per unit divided by selling price per unit times 100 will be equal to 40. Which is given right here. Now contribution per unit divided by the selling price of 50 times 100 will be equal to 40, which means that the contribution per unit will be equal to 40 times 50 divided by 100, which results in the value of 20. Now the next thing we can do is calculate the variable cost. So 50 minus variable cost will result in the contribution of 20. It means that the variable cost is 50 minus 20, which is 30. Now let us increase the selling price. We need to increase it by 10%. So 50 times 1 plus 10%. This results in the value of 55. Now we again need to calculate the new break-even point. Okay. Firstly, we also need to calculate the fixed cost using the formula for break-even point. So 4,500 is equal to the fixed cost divided by contribution per unit of 20. So the fixed cost will be equal to 4,500 times 20. Which is 90,000. Now the new break-even point will be the fixed cost because there is no change to this value. Then we need to calculate the new contribution per unit because the selling price is now increased. So the new contribution is 55 minus the variable cost of 30. This results in 3,600. So this is the new break-even point. Now we need to figure out the change in the break-even point. Previously it was 4,500. Now it's 3,600. So definitely there is a decrease, which is of 4,500 minus 3,600, which is of 900 units. So the answer we're looking for should be decreased by 900 units, which is given in option D. That is all for the 29th question. Let's move towards the next one. When might the application of cost volume profit analysis be ineffective? The first one is when a change in production method is planned. This is true because if there is a change in the production method, then it might mean that all of our variables might be changing. There might be additional variable cost per unit, there might be some new fixed cost, and according to our assumption of cost volume profit analysis, we assume that the variable cost per unit and the total fixed cost will remain constant. So A is the answer we're looking for. Let's take a look at the remaining options as well. When an increase in the price of direct labor is expected. when it is expected, we can just assume the cost to be the new increased price and then go on with the cost volume profit analysis. So this is incorrect. The third one is when output is likely to fall. Again, since we already know by how much it is likely to fall, we can already bring that assumption into our analysis. Then the fourth one is when there are fixed costs as well as variable costs. This has no impact on application of cost volume profit analysis. That is all for our paper. If you found this video useful, make sure that you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.